G'day everyone, Ben here. Thanks again for tuning in for all things property. Now spring is finally here, and how about the weather? Let's rip in first with the RBA, leaving the cash rate unchanged for the fourth consecutive month. What a wonderful parting gift Governor Philip Lowe is leaving us. Now the RBA did note that we're certainly past the peak of inflation, but it looks like it's going to remain high for some time ahead, as there's still definitely some concerns out there in the future. Now this is definitely going to be the focus for Michelle Bullock, as the baton is passed to her for next month. Now over the weekend, Sydney recorded 1,105 scheduled auctions. Now that's the second week in a row since April this year that the total volume of auctions for the week have gone north of 1,000. Now if we look at the data versus what's happening on the front line, it almost seems like they are painting two very different pictures. Over the last couple of weeks, the auction clearance rate has been falling ever so slightly, last weekend landing at 53.6%. However, if you look at what's happening out on the ground, the results that are taking place out there are nothing short of eye-watering. In Rod Point, Dan Patterson from our Des Moines office headed up this hotly contested auction of 49 Neald Avenue. This was a mid-century home, 2-bedroom, 2-bathroom, parking for 2 cars. It did have over a 20-metre frontage, and it did also have gun barrel views right down through to the harbour and the city skyline. This one traded for $8.5 million. To put that in context, that surpassed the previous suburb record by more than $2 million. Just absolutely astounding. Now, as we march into the spring selling season, there has been a fresh flurry of new homes entering the marketplace. SQM Research did monitor this, and they did note that they had an injection or a spike on their graph of 10.5% of new homes entering the market, the largest spike that they've seen for some time. However, there is FOMO creeping into the marketplace, and all of these buyers are snaffling up these homes relatively quickly, which is bringing the overall supply below the long-term average that they've got on their books. Now the mortgage cliff conversation, we've circled around on this sometime before in the past, and it doesn't seem like it's taking place. Louis Christopher chimed in on this conversation as well, and he commented that while people are holding on to their employment, there's no need for them to sell their homes. Now, just on that point, if we look at the distressed sale data, Neil Sweeney did report this week that the volume of distressed sales has actually retracted by 1.8% last month, which is really promising, as the fear of this mortgage cliff looks like it's starting to recede or at least dissipate. But if we convert that data to 12 months ago, the total volume of distressed sales have pulled back completely by 18.9%, which is actually a really big statistic. However, there are plenty of pundits out there speculating that the level of unemployment is definitely set to rise as we head forward into 2024, and that'll be a very interesting element to take care of and look at. Forecasting, surprise, surprise, CBA have come back and they've recalibrated their forecasting for the year. In May this year, they speculated that the price growth for this year would be something to the tune of 3%, followed by 5% growth for 24. However, after the last 4 months of data that they've collected, they've recalibrated this year to land somewhere to the tune of 7%, but are remaining modest with their 5% forecast for 2024. Now again, no surprise, this comes down to supply versus demand, but they are, however, putting their future growths down to the large injection of immigration into the country that we're seeing right now. Now out and about on the grounds, a home well worth checking out is number 4 Cooloola Place in Concord West. This home offers plenty of size, ample space, it's over multiple levels, it's got basement parking, oodles of natural light, and it's right down on the bay. For more information on that one, make sure you speak to Dan and Jack from our Des Moines office. That's it for me. Thanks again for tuning in. We look forward to seeing you out and about. Bye for now.